Now.
All right. Hello, everyone. My name is Jeff Wood. I do work for Traders Reserve. Just wanted to say happy Friendsgiving. This is such a great conference. 40 presenters over 4 days. So big thank you to David and Anka for having me back. And thank you, all of you who showed up today and taking time out of your schedule. It's 12 o'clock on the East Coast here, so I'm sure several want to go out and grab something to eat. So thanks for spending your time with me. And for me, it's also it's a great honor to be here because there's so many, like I said, there's 40 different presenters here, and so many of them are ones who have actually guided me and transformed my trading over the years. And now I get to be virtually side by side with them. So it's kind of been a fun journey. So a little bit about me, if you don't know anything about me, I currently write a free daily newsletter called Filthy Rich Dirt Poor, and I cover the markets, new trade ideas and strategies just about every day. I'm also an options coach for a service called Options Testing Lab, and I give traders new trade ideas. We go live every week. I'm mostly a systems-based trader. And today I want to speak to those who maybe are a little bit newer to options, or maybe who have really kind of struggled this past trading year. Maybe this past trading year has hurt their confidence level a little bit. Maybe you're frustrated with trading or the markets, or you're just looking for a potential way to collect premium every week using high probability setups. That's kind of what I'm going to talk about today. So I'm going to walk you through a step-by-step high probability trading setup that has a high win rate in exchange for a little bit lower profit per trade, but it does allow us to get into the market with less risk. And I think that that's really important during these volatile trading times. Is we really want to put less money in the market for less periods of time. But by the end of my presentation, you're going to have a complete trading strategy. As my old boss used to say, soup to nuts. You're going to have everything from entry rules, exit rules, profit targets. I'm going to go through everything over the next hour. And there's actually going to be a trade entry as early as tomorrow, and I'll show you why that's going to be. So hopefully that sounds good to everyone. And to illustrate how simple of a trading strategy this is, I had the opportunity to go to Europe a couple of weeks ago, and I didn't really have all my whole trading computer. I have multiple monitors and I have all this stuff at my house, but I didn't really have any of that. And so I did still want to place trades, and I was actually able to follow this system just using really my cell phone, during spotty connections over in Europe, and it was really, really simple. The strategy isn't going to make you rich overnight. I make no performance guarantees. And in fact, all of this is for educational purposes only. I'm not a licensed money manager or any of that fun stuff. The usual disclaimer sort of applies. But this is a strategy that I personally use every week and has potential to generate weekly income. All right, so let's get to it. The strategy works actually in all market conditions, but I like it in bear markets because of the increased volatility and the increase in the premiums that we collect. This is a selling options based strategy. The other reason I liked it is because it takes advantage of the indecision in the market. And I understand that some of you may be screaming at your screen saying, oh my gosh, look at that chart. It's clearly in a downtrend, right? But remember, over here on the left side of the chart, we don't really know what's going to happen. So over here, we're above a key moving average. Maybe as the option professor said, we're doing a reversion to the mean. Maybe that was clear, but it looks like, going down, going up, looks like maybe a false shakeout below the moving average, because then we pounce back up, but then that didn't hold. Go down, sideways, up, a little bit down, all that sort of stuff. So it's enough to sort of make you kind of go crazy, right? So I want you to remember this chart. This was, started in August, and this is the same time frame that I used to trade this other system. So as much as this kind of can make you go a little crazy, I've got a way to simplify trading a little bit. So when we have unstable markets like what we've seen in the past year, I mentioned this earlier, the key to surviving to me is by using less capital and not sacrificing your returns too much. And so I like to trade small in these times, and I like to keep money on the sidelines. unless you're really good at picking out market direction moves, then obviously go do that. But for those who struggle with that, this is a great strategy for you. And what I'm going to show you has the potential to generate weekly income at least 2 times a week. So I mentioned some of the, I want to show you some trade results before we get too far into this. So in August, I started a beta test and I started teaching others this strategy, and then I started tracking our progress. I've actually back tested this for a long time and I've been trading it for a while, but in August, I started with a small group of people and wanted to see if I could train them and see if they could follow it and follow along and see what their success was like. So we started this in August. Remember, that was that chart that was all crazy, and from August to just about last week, actually just today, we closed a winning trade this morning. We were using about an average of $500 per trade. Now, some people started out small and were using 1 contract, so they were only using $500. Others went up to 10 lot, so they were using $5,000 per trade. But we never had more than 3 trades on at once. So if you're doing 10 lots, you're talking about $15,000. If you're doing 1 contract, you're talking about $1,500. And those who traded 10 contracts and stuck with it the entire time, but this trading strategy gets you in and out of the market on an average about 4 days. That's why I called it the 4-day income trade. And there's a very small maximum requirement to get into these trades, also why I like this. This isn't going to be a get rich quick type of strategy, but I do think this can work in a bear market. And that's usually when I found most people reach out and ask for help, is when they're in a bear market. So we're going to go after high probability setups. We're going to go after high winning percentage trades, and we're going to go at very fast timelines. And this is going to help build confidence, and it gives you the freedom to step away and not sit there and stare at the market. I mean, unless you want to do that, that's okay too. So here's some of the results. We had a 92% win rate, 24 trades, 22 of them were winners. Just like every trading system, there's always going to be losers. But we did return over 23% in just 3 months with small but consistent winners. And that's what I love about this strategy. All right, so enough of that. I'm assuming you want to know how we did what we did and why we did what we did. So this is a mechanical trading system. And I know mechanical trading systems kind of gets a bad rep sometimes, but you can call it an algo, and somehow that makes it all better. So we'll just call it an algo system. But what we're really doing here is we're trying to come up with specific criteria for a time frame of when to place the trade. We're going to come up with specific criteria for what ticker to trade, and then we're going to go over the exact entry rules and exact exit rules. And what that really means is that you don't need to watch the markets. You don't need to scan for the next big trade idea. You don't need to have all these indicators and charts and all that sort of stuff. And I'm not saying that charting and reading indicators is bad, actually quite the contrary. I still use all of that stuff for other trades that I do, but I also like having trading systems that are a little bit more automatic. And this particular strategy, it kind of takes out all of those extras. It gets back to basics. It helps you get back on the right track, especially if you're frustrated at this past year. And the rules are so simple and easy to follow that it leaves little room for analysis paralysis. And that's something else a lot of new traders struggle with. This is just one strategy at your disposal. You can use it in conjunction with other strategies. This is certainly not meant to be the only thing or the only way that you would trade. It's certainly not meant to be a trading strategy where you put in 100% of your portfolio and let it run. Nothing like that. So please don't get the wrong idea. All right, so rule number 1, we're going to talk about time frame. So there are multiple opportunities that we can trade this strategy every week. So we place trades every Tuesday and Friday. That's why I said you have a great opportunity to learn this strategy today and place your first trade tomorrow, of course, in a paper trade account. Make sure you're comfortable with this before you put real money into it. But we place trades every Tuesday and Friday, and I like to do it about 1 hour after the market opens. I like to give the market a little bit of time to settle down. I'm not trying to capture opening gaps or anything like that. There's some great strategies if that's what you're into. But for me, I'm just trying to let the market settle and figure out what the price action is at that point. Now, for me, I live on the East Coast, so that's about 10:30 a.m. Now, if that doesn't work for you, maybe you can only do this at lunchtime. That's okay. Really, over the course of 100 trades or 50 trades or whatever, if you need to move the trade start time from 10:30 to noon or something like that, it's not going to make that big of a deal. You just really need about 10 minutes to place this trade. So whenever you can get 10 minutes on a Tuesday or Friday, you look to do that. So what we also do is we place trades on a Tuesday, and if we don't hit our profit target, we're going to place another trade on a Friday. And if we don't hit that profit target, we're going to place another trade the following Tuesday. So that's why I mentioned earlier, you can have multiple trades on at the same time. We never have more than 3 trades on the same ticker at the same time, but we will add to each position every Tuesday and Friday. Does that make sense? Everyone with me so far? Give me a 1 in the chat box if you're okay. You're with me. You can hear me. All right, perfect. Okay, good. Okay, so the second part of the system is trade selection. So we're only trading one ticker, and that makes trade selection really easy. I told you didn't want to have to scan through all these different stocks and come up with all these good ideas. We're just going to keep it super simple. We're going to go with one trade ticker, and that is the IWM. For those who don't know, that's the ETF of the Russell 2000. And what I like about it, it's comprised of several small cap US equities, and it's a little bit more diversified and less top heavy. And what I mean by top heavy is that, like, let's say you take the SPY, for example. That's a weighted index, and it tracks 500 stocks, S&P 500. But like the top 10 are responsible for moving like 20% of the index's daily move. And the IWM is weighted, but it's just not weighted quite that much. So when you have 2,000 stocks that you're tracking, it's more like herding cats. And so it reverts to the mean quite well. And I really like it. You don't get these crazy pops. You don't have to worry about all these earnings announcements or drug approvals or anything like that. It's just it's a solid vessel for trading this strategy. All right, so continuing on with trade selection, we're going to look to place trades every Tuesday and Friday, like I mentioned. But what we're really doing is we're looking for options where days to expiration equals 10. So in this example, this wasn't taken too long ago. That would be, we're going to look at these numbers here in parentheses. This is Thinkorswim, but this is available on any trading platform. We're going to look at the 10 days to expiration. So that is that guy right there, that 21st of October. So now we move on to the entry rules. So what we're doing is, let's talk about expected moves really quick. So you may have heard traders talk about standard deviations, and what they're really talking about is the probability to determine where a stock might move by a certain date. So if you look at this chart over here, the top of the candle, this is where it closed, and then the edge of the chart is 10 days later. And so all brokers have something like this. I think Thinkorswim calls it probability cone or something like that. But what we're doing is we can identify within a 70% probability of where a stock is likely to go. So this stock might go up for a couple of days, might come down, it might move flat, might move sideways, might move down, might move up. It doesn't really matter. What we're saying is that we think within a 70% probability, the stock is going to be somewhere between $177 up here and $158 in the next 10 days. And the stock is currently trading at 168. So what we're going to do is we're going to take that information and we're going to sell calls at those extreme levels. So if there's a 70% chance of IWM finishing between these two levels in the next 10 days, what we want to do is we want to sell options that have an 85% probability of expiring worthless. So that means that up here at this 177 level, there's only a 15% chance of the stock finishing up above this level in the next 10 days, and there's only a 15% chance of it finishing below this level over the next 10 days. And so that's the levels that we're going to sell our options. You could sell naked options at these levels, but you'd have unlimited risk, and most, if not all, IRAs won't even let you do that. So what we do is we turn this into a risk-defined trade. So you may have heard people talking about trading credit spreads. If you were on earlier, even Dan Passarelli, he talks about trading credit spreads. But that's what we're going to do is we're going to turn this into a risk-defined trade by selling a call credit spread at that upper level, and we're going to sell a put credit spread at that lower level. And by doing that, what we do is that creates something called an iron condor. And if the name sounds weird, it is. You don't have to worry about that. What we're just doing is putting on a call spread and a put spread. Don't let the names trip you up. So going back to our entry rules, what we're going to do is we're going to use the option Greek of delta to help us decide where we're going to sell our options. And so if you're new to options, or maybe you've new to the Greeks of options, delta plays a very important role. But for right now, just think of delta as the probability of the price moving to a certain level. So what we're going to do is we're going to let the options market determine where we should sell our options and then where we should buy that insurance leg. Remember, I said we want to sell our options when there's only a 15% chance of the stock closing higher than that level. So we're looking to sell a call at a 15 delta. And then we're going to buy the 5 delta, which is going to be above here. We're going to buy that as our insurance leg. And then we're going to sell the 15 delta put, and we're going to buy a 5 delta put as our insurance leg. Does that make sense so far? So on our entry screen, okay, perfect, thank you. So on our entry screen, we're going to pull up our options, and we're going to look for that column called delta, which is right there. And what we're going to do is we are going to look for selling the delta of 15. Now, I know in this particular screenshot, the delta only has 2 numbers. I know in Thinkorswim and actually most brokers, you can change the Greeks to have 4 digits, but if this is just a little cleaner, so I only have it as 2. And what we're doing is we're selling closest to delta 15. So right now we only have a delta 16 or a delta 13. So delta 16 is our closest to 15, and that's that strike price of 177. So that's that guy there. And then we're going to buy our delta 5. That's a 182 down there. So now let's go over to the call side. And if you sell the 16 delta call, right, you're going to collect $68. You're going to collect $68. And then you're going to buy that insurance leg for $18. So overall, you collect $50 per spread. Your broker is going to give you that $50 to place that trade. So on the put side, we're going to go over to the puts, same type of deal. We're going to look for a delta of 15. But now, I don't know if you can see or if this is too small, what's the problem here? We have a delta 14 and a delta 16 and a delta 18. Which one's closest to 15? Well, the delta 14 and the delta 16, they're both 1 away. So what are you going to do? Really, again, over the course of hundreds of trades, it doesn't really matter. Again, you can change the delta so it's 4 digits, and you can really, get granular with it and try to figure out which one has the correct delta. But for the most part, it doesn't really matter. If you choose a delta 16, you're going to get a little bit more premium. If you choose a delta 14, you're going to give that option a little bit more room to run. So in this example, I just chose the delta 14. And we're going to go up and we're going to buy that delta 5. So if you look at it again here, we sell the delta 14 for 71 cents per contract. We're going to buy the delta, the 5 delta, and as our insurance leg, that's $25. So the total credit that we receive is $46 per spread. So and this is, placing the on the trade screen, this is what that would kind of look like. You would get a total of $96. Remember, we got $46 for the put side. We got $50 for the call side. So you're going to get $96 to put this spread on. The buying power that's required for this, it says max loss as $504. And so what happens is the call side, you can see, is a 5 wide spread, and the put side is a 6 wide spread. So what the broker is going to do is it's going to take the widest spread. So this is $6 wide. So that's $600. Subtract the credit that you received, $96. So they're going to make you set aside $504 to place this trade. And that's why I said earlier, the average that we were taking is about $500 to put on one contract or one iron condor. That's the sort of average that is needed. And if you notice here too, by letting by letting the deltas dictate our position, so many times you learn about iron condors or you learn about spreads, and they're just sort of arbitrarily like 5 wide or 10 wide. But what we're doing here is we're actually letting the deltas decide how wide the spread should be. So for exit rules, we have our time that we enter, Tuesdays and Fridays, 10 days to expiration. We have our ticker, that's the IWM. We know how the trade is constructed with our entry rules of the selling the 15 delta and buying a 5 delta, but now we need to know when we're going to exit this thing. So we're going to buy back the trade when we can buy it for a 25% profit. Or we're going to just close it down one full market day before expiration. So if your expiration was on a Friday, let's say, then we're going to go in Thursday, we're going to look at it and just shut it down about 10:30 in the morning, say, hey, we didn't make our 25% profit target. Sometimes that might mean you take a small win. Sometimes that might mean you make a small loss. But what we don't want to do is hold this all the way through expiration. And so what really, by doing this, by setting up a 25% profit target, it also helps me remove emotion from the equation. When you start looking at charts, and unless you're really good at looking at charts, fear and greed start taking over. And so you start saying, oh, well, the trade's going against me, so I'm just going to hold on to it for a little bit longer. And then what happens? The trade reverses, and then maybe you lose on that trade. So what I like to do, so we're automatically closed one day before expiration. But what I like to do is I like to set up good till cancel orders with the broker. And so the moment I put on the trade and I collect my 98 cents or whatever that was in the example, then I'm immediately going to place a closing order, and I'm going to set it up so that I get a 25% profit. And what that also does is it allows me to really just walk away from the market. I don't have to look at CPIs or PPIs or any of the other alphabet soup that everyone's been worried about lately. I know it's a risk-defined trade. I know what the max loss is before going into it, and I know what my profit target is, and I've even set all of that up before I place the trade. So this really gives you freedom to go do whatever you want to go do, and not have to sit there and sit in front of your computer all day. And again, this is why I call it kind of my vacation trade, because I was able to go do this while I was on vacation. So an example, we took in $96 credit. You multiply that by 0.75 to get you your 25% profit target. So in other words, what we're doing is we're buying the iron condor back at a $72 debit. So $96 credit minus $72 debit, that's a $24 profit. Well, my dogs are going crazy. I'm so sorry if you hear that. They just want to say hello to everyone and happy Friendsgiving. All right, so we took in a $96 credit. We paid $72 debit. We get a $24 profit, and that is that equates to about a 4.7% profit on risk in an average of 4 days. So I told you I took a beta group of people and taught them this strategy. We placed trades together. This is sort of the results going back to August, based on doing 10 contracts, and we ended up, netting $4,050. Again, that was actually through November 8th, but we just placed another winning trade today. So those are the results. So if you want to see this trading strategy in action, I invite you to come out and test the options testing lab with us. Maybe this went too fast, or maybe you are really new to options, and you don't even know where to start. That's okay. We also have some of our subscribers who are altering the rules, and they're even supersizing these returns. And so all of that is, you can come and hang out with us in the options testing lab. And I actually have a partner who does this with me. Her name is Haley. She is a professional money manager, and she is the one that goes through all of the options education with you every single week. She also teaches technical analysis and trading. She gives you tips and tricks on portfolio management. And she even told me about a 3-letter word strategy. And that's actually helped me, over the last 4 weeks, just 3 little words. And it's not sell at the mid, although that's 3 words, but that's also a good tip. But the 3 words that she told me helped me generate more money every week. And so she's going to go over that as well. So she does that with you. She meets every Thursday night, Eastern time. She does a live training session where you can ask her almost anything. And then what we do is we take everything that you learn in the Thursday training sessions, and we apply it to real world trading with me on Tuesdays. And as we get through more of the fundamentals of options, then I'll be introducing more trading systems like this one. But we need to make sure everyone gets through the basics first. So we're going to cover the 4-day trade. We're going to go over different tactics. We're going to also talk about trade repair. So you would get access to Haley as your options training guru. You get trade alerts via email. And we also just launched a new beta version of our social trading hub. And so you can get trade alerts through the hub. You can connect with other traders. You get direct access to us to ask questions through the hub. And Traders Reserve also has other services and other gurus, and they'll be coming in as special guests and introducing some new concepts too. So we have a lot of big plans for the options testing lab. We're going to win some trades, we're going to lose some trades, but ultimately we have a very strong community of people that you can reach out to, that we talk about tactics, we talk about just all things trading, and we really just help one another. So it's a pretty cool place to come hang out. Do I have a stop loss of 50%? So the current trading strategy rules say no. The system as it was originally back tested has no trading stop loss. The only stop loss is really that is the one trading day before options expiration. However, given that this is options testing lab, we have been trading other tactics to bump up the performance, and that includes playing around with different trading stops. So the answer is, if you go by the back tested system as is, no. But there are ways that we can tweak that. We can take the trade. If we're being challenged on one side, we can turn it into a butterfly. We can change it into a broken wing butterfly. There's different trade repair tactics that you can do. Yep, no problem. So our next session starts tomorrow. That's tomorrow, Tuesday, live trading with me. So I'll be going over how to set up the 4-day trade, all the rules that we walked through today. I'll review last week's trades, the one that we just closed actually this morning. And we also go through, we also know that, as some of us use Thinkorswim, some of us use Tastyworks, some of us use Metastock. Like, we have all these different brokers and all these different charting platforms. And one of the things that people have reached out and said, that's great, you're moving a little too fast because I don't have that same platform. And so one of the things that we do is we're going to be recording sessions on how to place these types of trades, spread trades, iron condor trades, butterfly trades on different broker platforms. And the other thing I would recommend is you can always call up your broker and say, hey, I'm following this guy named Jeff, and he's trying to teach us trading spreads, or he's trying to teach us trading iron condors. And your broker will actually go through all of that with you as well, and they'll teach you how to use their platform. But we do that in our live trading sessions on Tuesdays. We also cover that in our training sessions with Haley. Can you let the iron condor expire? Yes, absolutely. You can do the iron condor. So, in a case like today, we had a trade that closed at 25% profit, and today we were still, we had, I think, $10 to the right and $10 to the left on IWM. I mean, we are just dead nuts in the middle right now, and we still closed the trade. But some of our people said, hey, I want more, I'm going to ask for more money. And you can actually bump that up to, let's say a 50% profit target. That's okay. The only thing is, if you bump that up to a 50% profit target, just expect a little bit lower win rate. So the reason I talk about 25% win rate, or I'm sorry, 25% profit target, is just to increase that win rate, get the confidence back up. It really works out for new traders. But if you're a little bit more seasoned and you're willing to do that, you can absolutely let the iron condor expire. There's different techniques that we teach. One is, if you're on one side, if you're favoring one side or the other, you can close out the side. Let's say you're favoring the call side a little bit, the trade's going up and you're near the call side that you sold, you can close out the put side and take the money, there, and then let it roll and see if it continues, and then if it goes down, you have basically a risk-free trade to the downside. So so you can do that. 297, it's actually it's for a big 13 weeks, I think, or 15 weeks. It's starting tomorrow through February 24th. So 297 for however many weeks that gets you. Is there a separate cost for a mechanical trading system? No, there's no separate cost for the mechanical trading system. I don't have it as an auto trade system through a platform or anything like that. I'm sure you could set it up as one, but I just go through and I post the trades. I meet with you every Tuesday and place the trades with you in a live trading environment. And then on Fridays, I send out trade alerts on Fridays through the social hub. And you'd get the Friday trade that way. So I'd love to see you guys there tomorrow. I know this link is going to be live. If you're thinking about it, I know this is going to be live so that the people watching the recording of the Friendsgiving event will still have access to it. So I don't know how long the link is going to go live for. I'm not trying to do the whole marketing thing, but and I'm not sure when the price is going to go up. I don't have anything to do with the prices or any of that sort of stuff, but I think the link should be live for at least another week or so. Let's see, do you guys have any other questions? David's going to hurt me here because this is finished a little too soon. So I'd love to answer questions if you have any. Your website has a lot of products. Yeah, we have a couple of different trading systems, not trading system, trading services. So this is called Options Testing Lab. If you go to that link, go.tradersreserve, I think David also posted it in the chat, but go.tradersreserve.com/OTL November to February. That's the place to get the service. There you go. Thank you so much, David, for posting that again. Yes, and if you again, we have a bunch of different services at Traders Reserve, depending on your experience level. So I can answer questions about that if you want, or send a note to support@TradersReserve.com. Leslie and Mike, our all-star support team, they are standing by and they can help answer questions as well. Do you place 2 vertical spreads or 1 iron condor? Great question. So depending on your platform, it sort of depends. What I'll do is I'll kind of have an iron condor and then I'll have the 2 vertical spreads broken out separately, and I'll see if the price is different. Sometimes you can actually get better fills with your broker if you set it up as 2 vertical spreads. If you're a little bit more of a seasoned trader, or if you understand how to do that, that's okay. Some people just like the simplicity of setting up an iron condor, just because it's all 4 legs in one trade. But yes, we also do talk about one way to supersize this system is legging in and out of trades. It's a little bit hard with 10 days. It's a very short dated options play, but you can leg in and out of your trades to get a little bit more profit there. Good question. Thank you. I don't see any other questions unless you do, David. IWM is the ticker. Yes. Follow it, but so, okay, yes. So there's a question about, do I focus only on this ticker? For this particular strategy, yes. We don't only focus on that one ticker for options testing lab. We're going to be introducing other tickers and other strategies in December. We're just kind of letting the Thanksgiving go through a little bit. But for this particular strategy, I found that IWM works really well. I have tested it on other tickers, and the win rate just isn't as high. Some of it is you can get more premium, or the net profit is higher, but the win rate is down. And so that just kind of depends. Oh, here we go. All these good questions. Max loss on one trade. The max loss is the distance of the highest spread. So if we're talking about a call spread that has, let's say, 5 wide and a put spread that's 5 wide, that's $5 minus the money that you collect. So let's say you collect $1 for placing the trade and you had a 5 wide iron condor, 5 wide on both sides. Your max loss is $400, but max loss is only if you hold that through expiration and the price blows through that top end or the lower end of the spectrum. And I don't hold to expiration. So the chances of a max loss happening are very slim. It would have to blow through the high side or the low side in a day or two and stay there. And again, we have some trade repair strategies. You know, you're not going to win all of them, but the trade repair strategies will help mitigate some of those losses. So max loss is typically about $500 on one trade if you're doing a 1 lot, but I would never take that. Which day of the week do we apply the strategy? Tuesdays and Fridays. Tuesdays get you a 10 days to expiration, and Fridays will get you a 10 days to expiration as well. All right, what was the loss in the trades that you placed since August? So on a 10 lot, we lost $130, and we also lost a $1,300, I believe. So the 1,300, that was a 10 lot, so it was about $130 per iron condor, and that was when IWM went straight up. I think it was had a 7 or 8% gain in 7 days. So that was kind of a nasty one. Can you do 1 or 2 trade review of the last ones that you took? Sure, I think so. Let me go to my trade screen and see if I can pull this up for you first. Hang on 1 second, and I'll do that for you. How's everyone doing? Where's everyone from? You guys are still here during lunchtime, so that can't be too bad. All right, so let me do a new share. Let me find this one. All right, so if you can kind of see, I don't know if this is big enough. Can you guys see my charts here? Give me a 1 or a yes or something. Okay, cool. Okay, so over here, we placed a trade, and you can kind of see these white lines. Let me see if I can extend them here. So here was the market. Yes, the 4K profit is based off of trading 10 lots. Yep. So here was the market. Let's see, when did we place the last trade? Let me get the exact dates for you, just so we can make this all good. Okay, on 11/4, so let's go back one. Oh yeah, okay, so yeah, so here we go. So on 11/4, these 2 gray lines were the 15 delta. So this is where we were going to place a trade. Now we don't know what's going to happen to the right. We don't know, we see this big move up. We see a little bit move down. I have no idea what is going to happen, where the trade's going to go. I have no idea where IWM is going to go. I can sit there and make up cases for why it's bullish. I can make up cases for why it's bearish, all that good stuff. But now look at this. What was interesting about the 15 delta is it was pretty much right at resistance here and here. And if we look at support, the 15 delta, now again, this is nothing to do with chart reading or anything else. The 15 delta, just looking at what the 15 delta was at the point of this trade. And the 15 delta was down here at this area of a lot of congestion. There's support over here, a little congestion over here, really, a lot of congestion over here. So this was the trade was selling the 170 and selling the 190. And again, actually, this one we put on 11/4. We closed out at 11/7. So we closed out. We didn't even have to go that far. We closed out here. So 11/4, that was placed right before a weekend. It actually, gapped up a little bit Monday morning. It kind of bounced around, and we were out with our 25%. So no idea what the trade was going to do. Or where it was going to go, but we still closed out. So let's see, the next one we placed on 11/8. That's right here. So let's go back. Let's go back a little bit. Placed a trade. I'm going to go back one. All right, 11/8. Let me go find what that trade was. 1 second, everybody. It's 190, 170. Hey, look at that, 190, 170. Okay, so here we go on 11/8, did another 190, 170. So again, have no idea if it's going to go up. Have no idea if it's going to go down. Can make a case either way. So on 11/8, we collected $1 in premium. And so this is a fun one because So we placed the trade on this bar here, 11.8. Next day, it goes way down. We had a bunch of people saying, "Oh my gosh, what's going to happen? We're getting close to, we're only less than $5 away. Our trade is sitting at a $50 loss. What's going to go on? What's going to go on?" And I said, "I don't, we're just going to let it play out. We know that if it hits 170, we have some repair tactics that we can use, but we're just going to let it play out." And then what happens the next day? Huge gap up, and actually at the gap, our exit rule was to get out at 74 cents when we could buy this back at 74 cents. It gapped up so much that it blew through our GTC orders, and some people actually got out at even less than 75 cents. So, so even with this type of trade action, we still made money. I had no idea that it was going to go down this much. I had no idea that the very next day it was going to pop up that much, but it didn't really matter. We still got out with profit. Can you describe one or two trade repair tactics? Yes. Oh my gosh, thank you for asking questions so that David doesn't have to cut me off early. Okay, so let's go through. I just might have to share a different screen. So 1 second while I pull that up. Stop share. Let's do another share. Good questions. Good question. I like questions. All right, so let's say all right, let's put this on. Let's see. Let's say we were 4 days to expiration and we had I don't know, where are we trading? 186. So let's say that we happen to place these prices are going to get a little wonky, but let's say we had a 186, 180, and then our call side was, I don't know, oops, 199, 204. Let's see what this does. All right, so let's say that we're over here and we're getting a little bit we're getting a little bit worried that we might get over to this 190. And so what you can do is, since I don't have the trade on, it's going to get a little complicated, but what you can do is you can roll up the puts and you can do like a butterfly. So let's say that we sold the 190 call and we bought the 195 call for our insurance leg. What you could do is take the profit that you have here from the put side and you could sell the 190 put and buy the 185 put. And so what that's going to do is that's essentially going to it's going to turn it into a butterfly, and it's going to make it like a little triangle. So what that would do is, let's see, 1 second here, 190. So what it would do is it would turn the trade into something like this. And so now, if it doesn't do anything, then you can peg it and you can get $337. It reduces your max loss. So on the Iron Condor, let's say we had a max loss of this $500, but by turning it into a butterfly, you collect credit. And so that's going to minimize the max loss on the trade. And then that's going to still give you a little bit of room. It's a little bit smaller room to the left or right to still make money. And so what we're really hoping is if it goes to an extreme on one side, we're hoping that it's going to come back, or we think that the probability suggests that it's going to come back and revert to its mean. And so if we do that, it's going to come back here. And every day that passes by, you would get a little theta decay in, chance to make some of that money back. If the trade goes against us, what's the stop loss for the iron condor? So if the trade strategy that I laid out specifically, there isn't a stop loss per se. You just wait until 1 day before expiration. But again, you can do trade repair tactics like this that give you an opportunity to cut your max loss a little bit, if that makes sense. Did you have to repair any of your winning trades? Not of the winning trades. I have not repaired any of the winning trades. No. And actually the big loss, that the one that I was talking about where we did, I think it was a $1,300 loss on 10 lots. I did the trade just to show everyone what the trade rules were. I said, hey, look, the trade rules to let this thing go. We're going to let it go. And we're not going to do any trade repairs. We're just going to let the system do its thing. And so I wrote that down. And in a separate account, I said to everyone, hey, we're going to do some trade repair and we're going to see if we can do, if we can do a little bit better. So that same 10 lot, I think, ended up being a total of a $200 loss on that second account that we did. Trading 10 lots, what's your maximum risk? So it's $500 per one contract. So you're talking about $5,000 if you're doing 10 lots per trade. If you and we're putting on trades every Tuesday and Friday, so you would need roughly $10,000 to $15,000 at once. But I'd start small. Doesn't matter what your trade size is. I would still start small. Getting used to any sort of mechanical trading strategy or anything like this, I would start off with one contract, or start off with paper trade do that for a while. Make sure you get comfortable with it. It's very easy to backtest something and say, oh, of course this is going to do great. It's another thing when trade goes against you and fear and greed start taking over, or when you're right in the middle of your iron condor, let's say, and you're like, oh, well, I could get out at my $20, profit, but why not just let this thing ride? I could make, that much more. So. Would a key to success being used multiple timeframes and other techniques and trade management of losing positions? Yes, Eric, it would. And that's one of the things that Haley teaches with portfolio management. It's one of the things that I teach as well, is we're building up to using 4 different trading strategies all at the same time on different ticker symbols, using different time frames. So there's trades that we do that are 28 days out. There are trades that we do that are 60 days out. There are trades that we do 7 days out, 10 days out. So what we're trying to do is multiple trading strategies using different time frames and different ticker symbols. But great question, Eric. Yes. What's the most I've lost on one trade using this system? It was a 10 lot, and it was the $1,300 in that one account. And that, again, that one account was no trade repair. I don't touch it. I just let the rules do what it does, and I didn't do anything with it, and I lost $1,300 on one trade. Good question. Let's see, did I miss any other messages? IRA for avoiding a wash sale. I actually do trade in an IRA, and I don't have any issue with a wash sale. So I don't have a good answer for you. I don't have an issue. I don't have a problem with that. So I don't know. But David, it's 12:55. So if you guys have any questions, and I didn't answer 25% of the credit amount or of the risk amount, it's 25% of the credit amount. So if we take in $1, then I'm going to buy it back for 75 cents. So take in $1, buy it back for 25 cents. I'm sorry, buy it back for 75 cents. So I get a $25 profit. I know trade commissions and everything, can get a little crazy. you can always work with your broker on trade commissions. Trade commissions are pretty small right now, so I don't worry about that too much. You can also trade something like this in Robinhood, something like that. How do you communicate trade adjustments when necessary? All that's through the social hub that we have. That's the beta test that we're doing. And so until we complete the beta test of the social hub, everything also comes out through email as well. Level 2 in an IRA. Yeah, I think you would need a level 2 in your IRA. I think level 1 just gets you covered calls. So I think level 2 gets you spreads. But I don't want to cut you off. I love all the other traders so much, so I want to give them the full amount of time. Thank you so much for asking questions. I was a little bit worried that that was kind of like an expiring option. I was a little bit worried that but kind of found our ground and finished right on time. So thank you so much. I really hope to see you tomorrow for our live trading. And if not, then I at least gave you a trade system that you can use on your own. Completely for free. I gave you all the rules, entry, exits, all that sort of stuff. So I appreciate your time. Thank you so much, David, Anka. Thank you for having me on. God, I love doing this stuff, and I love talking to other traders. So thank you.